What is up, guys? Happy Monday. Today, we're going to go ahead and talk about risk to reward and how we can understand that in a whole, right? Because not every trade idea is going to go your way. Some things might happen and you need to be prepared, right? So, understanding risk to reward and how you can have that be used in your favor is a very, very powerful thing, right? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. All right, guys, let's go ahead and take care of this. These 10 circles, these are 10 trades, right? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 trades. Give me a 5 if you guys are with me so far. Now, I like to talk about risk to reward in a 10 trade cycle, right? This can be in a 20 trade cycle, 50 trade cycle, 25 trade cycle, but I like to talk about mine in a 10 trade cycle just so it's easy and straight to the point, right? Because the math works. The math works. Okay. Now, what we like to focus on here are 1 to 3 risk to reward trade ideas, right? 1 to 3 risk to reward trade ideas. But the setups that I'm going to break down first, they're going to be 1-to-1s because I want to show you why we don't use 1-to-1s and 1-to-2s and why we strictly stick with 1-to-3s. Okay. Now, let's go ahead. I'm going to go draw this and break this down for you. Each trade will be taken at a 1%. At 1%, right? So I like to take my trades at 1%. Whether you break it down, so on and so forth, that is totally up to you. But again, I'm going to go ahead and keep it easy. Each trade is 1%. That way the math is simple for you guys, okay? So each trade will be taken at 1%. And for this example, we are going to use 1-to-1 risk to reward. Okay. 1-to-1 risk to reward. Awesome. So let's go ahead. Now, why I like to use 1-to-3s is because it allows you to take losses and you can still end up profitable. Now, the thing is, with 1-to-3s, you're allowed to take 7 losses. And if your last 3 hit, you end up profitable. Now, let's see if we can use the same logic with 1-to-1s, right? So let's just say first loss was an L, second loss was an L, third loss was an L. Now, again, guys, as we're taking these trades in our cycle, I don't want you guys to get emotional after 1 loss, after 2 losses, after 3 losses. It's important that we try to shut off that negative emotions, and let's worry about those emotions after a 10 trade cycle. Okay. So 4th loss, 5th loss, 6th loss, 7th loss. So again, 1, 2, 3, 4, 5, 6, 7. We're down negative 7% right now. Okay. In a collector from here to here, we are down 7%, negative 7. Now let's just take a look. Let's go. Patrick from Zenray said, focus on process, not the outcome. Exactly. Exactly. That's well said. Now, let's say our next 3 trades are winners. Boom. 1 win, 2 win, 3 win. Right? So from on this side, I'm up 1, 2, 3% plus 3%. Why am I only up 3%? Because we are using a 1-to-1 risk to reward, meaning let's say I was risking $10. My profit is only $10. Give me a 2 if this makes sense, guys, if you guys are with me so far. So even though, right, even though I took 3 wins, this didn't put me into profit. right? It helped me get out of negative a bit more, right? But I'm still in the negative, right? So -7 plus 3 would give you -4, right? So I'm still in the negative. Okay. So this is why we do not want to use one-to-one risk to rewards. It doesn't work in our favor. If you follow a 10 trade cycle, you damn near need to be +7. You need to win damn near 6 to 7 times, 6 times just to be in profit by 1%, which I'm not down for that. Okay. I want to be able to take a couple losses because I'm human. I'm not going to be perfect, right? It makes sense. I'm not always going to be perfect. Now, with this example, I'm going to change it to a 1-to-2 risk to reward. Okay. Everything in our 10 trade cycle stays the same. I have 1 loss, 2 loss, 3 loss. Now, again, guys, you can't be emotional. Understand that we have to finish the 10 trade cycle. Now, if you lose all 10, then okay, we can get emotional, right? But if we still have some wins in our 10 trade cycle, sometimes it might not be that you're a bad trader. Sometimes it's going to be your risk to reward. Okay. 4 loss, 5 loss, 6 loss, 7 losses. So again, from here to here, we are down 7. We are down 7%. But let's say our last 3 trades in our 10 trade cycle was a win, was a win, was a win. So again, this is a 1-to-2 risk to reward, meaning this is +2. This is +2. And this is +2. 2, 4, 6. Am I in profit yet? Am I in profit yet, guys? No, I'm still down. It helped me get out of profit. I'm not going to say it didn't help me, right? But I am still down -1%. Yes, Angie, let's go. I'm still down. So it's not really benefiting me with my 10 trade cycle, right? But now let's go ahead and use, oh snap, it's going to take a minute. Let's go ahead and use a 1-to-3 risk to reward. 1-to-3 risk to reward, right? Now, again, same rules apply. Let's just say, this week is just not our week, and we're just saying L after L after L after, like, yo, I get it. Sometimes it happens, right? Now, again, 1, 2, 3, 4, 5, 6, 7. From here to here, I am down 7%, right? Each trade was taken at 1%. I took 7 losses. I am down 7%. Now, let's say my last 3 trades are wins. 1 win, 2 win, 3 win. And because we are using a 1-to-3 risk to reward, so let's just say my loss was a $10 loss. My win is going to be a $30 win. Whatever I'm risking, I want to get at least 3 times that. So we have a +3 here. That was the ugliest 3. Oh my goodness. Let's go. We back. +3. +3. 3, 6, 9. Guys, I don't know about you. I know my math has been bad my whole life. All right. Well, we're going to do some basic math right now. We're all going to use our fingers. Okay. What is 9? Let's go, Angie. 9 minus 7. Did I do this right? 2. Let's go. 2. So we is up We are now up. We are now in profit. So for my 10 trade cycle, finishing from 1 all the way to 10 trades using a 1 to 3 risk to reward, yes, I took 7 losses. It was a hell of a week, right? But my last 3 trades put me up plus 2% for the week. Plus 2% for the week. Now, this might not sound like, yo, that's not a lot. Plus 2% isn't enough for me. Okay, cool. Now let's say we're up 2% every week for a month, right? Let's say we're up 2% every week for a month. Week 1, week 2, week 3, week 4. How much am I up by the end of the month, guys? 2, 4, 6, 8. I'm up 8% by the end of the month. 8%. Okay, cool. So now let's do some math. 1 month. 1 month equals plus 8%, right? 1 month equals 8%. So let's just go, let's do the math. I'm gonna do the math on my phone. Y'all can do the math with me, right? And if I'm doing this math wrong, please let me know. Because again, my math, my whole life, not the best. Okay. But again, I want 8% times 12. 8% times 12. If I can do 2% a week for a whole month, for 12 months, right? 12 months times 8%. Guys, that gives me plus 96% for the year. I don't know about you guys, but is this good? Would that be good for you? Would that be good for you? Now, again, let's bring this back, right? This right here is technically the worst case scenario because I don't think a lot of you guys are going to be losing 7 trades in a row. Does that make sense? I think you guys are good enough to maybe lose 3 to 4, but out of 10 trades, I don't think you guys are losing 7 trades in a row or 7 trades, period. Out of 10 trades, I don't think you guys are losing 7. So bringing it back to here, that's the worst case scenario. Using a 1 to 3 risk to reward. Give me a 10 if this is making sense. What do you recommend? What do you recommend? Oh, it's gonna move up to work on when your trades are not always hitting 1 to 3. Even if my trades setup is giving me 1 to 3 based off market structure, exit it doesn't always give me a 1 to 3. Well, again, that goes to money management. You have to have good money management. And that happens too, right? Like that's also going to be in effect. Like that's also going to affect this right here. But you have to have good money management, whether that's changing up, right? Again, when I first started doing these calls, I was breaking even at 1 to 1 and taking partials at 1 to 2. And then I was back testing this a lot more and I realized I was holding myself back. I was holding myself back from some gains, right? But when I flipped it, when I started taking partials at 1 to 1 and breaking even at 1 to 2, I started seeing a lot more progress with the gains, right? So what's good money management? I did 2 calls. They're on my YouTube. Check them out. Check them out. We did 2 calls, literally last 2. They're on there. Fire, promise you. But guys, this is the worst case scenario right here. Okay. So again, you guys want the power in your hands, understanding risk to reward. It's okay to lose some trades. Guys, when it comes to baseball, I'm always going to bring this up because I think it's like the best analogy, especially when you bring it into like to bring a baseball player into trading and you tell them this analogy, their brain's going to say, let's get it. It's time to go. In baseball, a Hall of Famer, right? Most of them, the big hitters, the greatest hitters of all time, hit about a 300, right? Meaning, same rules apply. Out of 10 at bats, they're hitting the ball, they're putting the ball in play 3 times out of 10 at bats. And those people are considered the greatest baseball players of all time. Give me a 2 if that makes sense. So, if this is your profession and you take this to be like a profession that's going to pay you the big bucks, it's like everybody's dream, right? Everybody wants to get paid millions of dollars. They want to be an actor. They want to be a model. They want to be a football, baseball player, right? Everybody wants to do things that's going to pay them the big bucks. And trading can eventually, right? We all start somewhere and work our way up. But if you treat this like a profession, well, I treat this exactly like baseball. Out of 10 trades, I want to hit the ball. I want to hit TP minimum 3 times out of 10. And I know that's going to benefit me. Even if it's a small percentage, guys, even if it's a small percentage growth, it is going to benefit you. Now, taking it back here, right? 2% a week gives you 8% a month. Guys, if you partnered up and you put your money in some fund, some bank, guys, they're not going to give you anything over 10% a year. If you go anywhere and say, hey, I have this much money, what can I get back in a year? They are not going to give you more than 10%. You can do more than them for yourself. Okay? Guys, are you ready to run this logic on some examples? Let me know. Does anybody have any questions before we continue? Any questions? Any questions? All right, let's get it. Let's go then. So I'm not breaking down examples today. I'm not showing you anything, right? That was my breakdown of today, right? This was my basics because it's important to understand risk to reward basics and why we use 1 to 3 and why we do not use 1 to 1s and 1 to 2s. Okay, this right here is very important. So now we continue. As we drop down to the lower time frame, check me out, guys. We have an opportunity down here based off of structure. We have a BOS to the downside, and we have a change of direction. This is a setup that we like to call a head and shoulder, and this is a reversal pattern, right? So you see how the market is going down. We got to break a structure to the downside, and then the market reverses and changes direction. Once we see this, we are now shifting our bias from sells to buys, okay? But now, since we got our confirmation here, since we got our change of direction, I want to look for buys. I personally, I'm not in the business of counter trend trading. That's for me personally. I don't really take a whole lot of counter trend trades myself, right? I want to, if market's telling me to buy, I'm looking for buys. If the market's telling me to sell, I'm looking to sell, right? So now take a look. We have the change of direction, but now market structure starts to form. We have a higher high, higher low, higher high. Now, let me see. Does this market change structure? Let's use the 2-hour. Right? So we have a break of structure right here. BOS to the upside. So the market's telling me like, yo, I have a buy opportunity right here. We have a break of structure. Guys, this is a 3-candle breakout rally. 1, 2, 3. my starting point is right here. So we have an opportunity here and an opportunity down here. What if you were saying to yourself, I'm not going to take that one. I'm not going to take the higher zone, and I'm only going to wait for the lower zone. What if you said that? You would have missed out on a perfectly good opportunity. Does this make sense? Give me a 2 if this makes sense, and give me a question mark if you're confused right now. We are taking opportunities as they come, right? We're going to put the power of risk to reward in our favor. Once we want to see all the confirmations, right? Let's see. I mean, I was just using this for an example. I don't know really what's going on. I mean, other than this, I can see BOS, change of direction, liquidity came back, opportunity here, stop loss. Stop loss was hit, right? But look, I would have been looking for some buy opportunities based off of structure here. Okay, cool. Let's say you were looking for this as an opportunity. Your first trade in your 10 trade cycle was a loss, right? Happens. But now look, second trade in your 10 trade cycle was a win. Let's delete this for the visual. So let's delete this for the visual as well. Based off of structure, very ugly structure. I personally do not trade ADCHF, but based off of structure here, it gives me the breaker structure to the downside. It gives me the change of direction. I'm understanding the bullish bias, right? Possible buy opportunity here. Market definitely hits your stop loss. We are down 1%. We're down 1%, guys, okay? Trade 1 in our 10 trade cycle. Market comes back into our second trade, hits TP. Second trade, we are up 3%. Boom. So what do we have? Well, let's go ahead. 3 minus 1, I'm up plus 2%. I'm in profit right now. Give me a 2 if this makes sense, guys. I know as soon as I start drawing numbers, you're going to be a deer in the headlights, right? But I need to show you the visual. Trust me, that's how I was too. I'm like, okay, you're explaining nice, but now I see numbers. I've gone blank. I don't know. Right, but now let's take a look. Is this, why can't I delete this? Oh, okay. Duh. Bet. Okay, so let's take a look. We have a breaker structure to the upside. I'm gonna move my starting point right here. Really don't like this starting point too much. And let me show you. It's because I see a lot of equal lows. So I'm not saying that it can't be respected, but since we had a buy way down here, I want to see if the market can come back lower, actually. Let's delete this for the visual too. Right? Definitely not liking that liquidity. So there are going to be zones where you're going to have to, put some extra education to it, right? What have you learned? That is a starting point. I do see the starting point, right? But I also see liquidity. So in my mind, I would much rather go for the lower zone. But again, I've seen those zones react. So do your back testing. But check it out. Market never came down low enough. Market gives me another break of structure to the upside. Now let's take a look. Does market give me an opportunity? Yes, it does. So now this is my third trade in my 10 trade cycle. Now, again, I'm not worried about counter trend trades. I'm not looking to sell right here. I'm not worried about that. If the market is telling me, hey, we are going higher, I want to continue looking to go higher. I'm not looking to sell here or here or here. If the market is buying, I want to look for buys here and here and here and here. Does that make sense? Give me an 8 if that makes sense, guys. Because that's important. Like understanding trend, guys, is really half of the battle. Like if you're struggling and you're trying to ping pong, sometimes taking a step back from ping ponging will do you some justice. Okay. And only worry about the trades that are flowing with the trend. But now take a look. This is my third trade in my 10 trade cycle. Guys, do we hit take profit? Yes. Yes, we do. So I was up 2%, right? Got myself out of negative. Now my third trade is +3. Guys, I am up +5%. And I am only on my third trade in my 10 trade cycle. We have a break of structure here. This is not a break of structure. Tried to, but that's not the one I'm looking at. Right here. Look at this vicious break of structure to the upside. That's nice. That's nice. I'm going to move my starting point right here. This is what I'm waiting for. I am personally not looking for sales here. I don't take a lot of counter trends. I want the market to make its way back down to this area so I could start looking for buys down here. I could shift that market up higher. This would be the fourth trade in my 10 trade cycle. Now, let's just say the market hits my stop loss. I'm up 5%. My fourth trade hit my stop loss, -1%. That still leaves me at +4%. Give me a 1 if this is starting to click for you guys. Because honestly, when I first started, I hated taking losses, guys. Like I hated it, bro. Now it's like, oh, I took a loss. Whatever, bro. Let's go ahead and see why. Right. But when I first started, bro, man, I took a loss. I was like, that was worse than a breakup, bro. Didn't touch the screen for 2-3 days. Was like reading a bad text. You know, I just stayed away from the screen. I didn't learn from it. I felt embarrassed. I thought I was a shit, and I wasn't, obviously, right? But it's important to you guys, if you guys take a loss, one, understand what trade it is in your 10 trade cycle. Understand how much profit you are up or down in your 10 trade cycle, and keep running your risk to reward. Because just because, and again, this is just examples, right? Like I'm just speaking. Now let's say the market does hit our stop loss. Boom, hit our stop loss. But it also gives me a break of structure to the downside. And it also gives me my change of direction. Okay, cool. This right here was market manipulation. Happens to everybody. Market wicked me out. Guys, have you ever been wicked out before and the market continues to go your way? Has that ever happened to you? You know what? That used to happen to me, and I used to never touch the charts for like 3 days to a week. But if I would have stayed focused and I would have stayed out of my emotions and focused on my 10 trade cycle, I would have seen a nice change of direction. And about 6 to 7 times out of 10, the market does give you a re-entry. So it's all about playing your scenarios, guys. Okay, we took a loss right here. That doesn't mean the sales are in order. That just means you took a loss. The market manipulated you, and it happens from time to time. But you have to stay focused on the market structure and what the market structure gives you. That's why I always tell you, whenever the market hits your stop loss with the candle, right, let's make this a gray candle. Whenever the market hits your stop loss with the like just like this, right? You have to wait for that market or that candle to close, because if the market crawls and stays within your setup, the market can continue going your way. So it's super important you guys stick to your confirmations and not get emotional. Super important, guys. Super important. Let's go ahead and see if we can find any other examples. I don't even know. Let's take a look. Okay, this is I mean, everything else inside of here is pretty crazy. Hey guys, didn't we call this out, or am I tripping? Because why do I have this set up like this? I don't even trade CAD CHF. Do we call this out? Anyway. Let's see. All right. This was a 2-hour starting point. Is also a 1 hour. Okay, that's a 1 hour starting point, right? 1 hour starting point. But I'm gonna go ahead and jump to a higher time frame to clear some noise. And I'm gonna show you this. Look at this, guys. The market is telling me, hey, we want to start going higher now. The market gave us an A+ setup, consolidation, phase 1. We have the breakout, phase 2. We have the change of direction, phase 3. Once you get phase 3 and we change direction, guys, I am now looking for buy opportunities. Okay. As soon as we get this confirmation, I am now looking for buy opportunities. But now look at what the market is giving me. I know I have a buy down here on the 1 hour. Market's giving me a higher high, higher low, break a structure to the upside. This is also a buy opportunity. But we don't know what zone the market is going to respect. So this is in the case we have to run our risk to reward. I always want the lower zone, but how many times have you seen the market leave that lower zone for weeks later, days later, months later? Do you guys see that, or is that just me? When we want the lower zones, and the market will find its closest starting point and then take off for a little bit, for a couple of days, and then the market will come back, boom, catch you, and then it's gone. That's why we have to take these opportunities as they come, right? We take a loss here. Okay, cool. Let's still use our 10 trade cycle, right? We were on cycle trade 4. I am in profit 4%. That's ugly. Let's fix that, because that's gonna bug me for sure. I'm on trade 4. I'm at 4%. This is trade 5, and I am now down 1%. Equals plus 3%. That's trade 5, right? Give me an 8 if you guys are with me right now. But just because we took a loss, that does not mean we are shifting biases from buys to sells. We are still thinking buy opportunity. It just violated the first setup. Okay, cool. Hit our stop loss. Come to me down here. I always want the lower zone. 1 to 3 risk to reward. Guys, do we hit take profit? Yeah. Trade 6. This is trade 6. Trade 6 plus 3%, baby. We are back up at plus 6% for the week. We are up plus 6% for the week. Now, honestly, this is up to you. This is where you have to talk to yourself, the trader. Yo, is 6% for the week good for me? Because I ain't gonna lie, like if you're up 6% for the week, you could stop trading. I would respect you and be like, yo, you had a good week, bro. It's Wednesday. It's Thursday. You don't have to trade the rest of the week. Like, you're good. Does that make sense? You don't have to take the 10 trades. As long as you're in profit, bro, that's a profitable week. Take some money out of the account. Go buy some flowers for your girl. Go buy a hat for your mans. Go take him out. Go to the movies. Go put some gas. Go buy some groceries. Go pay your phone bill, bro. No, on God, like real stuff. The more we trade, guys, we sometimes we feel like we're gonna make all the money in the world. But the more we trade, sometimes we don't make the best decisions, especially when we are in profit. How many of you guys be in profit and then you be acting a motherfucking fool? I see you. I see y'all on your Instagrams acting up, acting a fool, showing out for the squad. All the city girls and city boys just they be feeling good. They up 6%, baby. Right? But now, exactly, right? You gotta pop your shit when it's time to pop your shit. But now you have to ask yourself, like, yo, I'm up 6%. Like, am I good for the week? Can I stop? Am I proud of myself? Like, yes, bro, you just made 6% in a market that's $7.7 trillion a day, daily, 7.7 trillion, and you've been able to gain 6% for the week. Man, tip your cap and have a good week, man. Have a good weekend, right? Have a good weekend. So that's up to you. That's debatable. But now that was trade 6, right? Trade 6. Oh my, why do I keep doing that? Clean that up. Clean that up. This is what I'm seeing based off of structure here. I'm still seeing 2 opportunities. I see we have a break of structure to the downside. Let's just clean this up. And this is my change of direction here. Now, some markets aren't always going to be clean. It is what it is. That's why you have to understand break of structures or change of directions, right? So I still see a left shoulder here. All right, this one was taken as well, right? Lower opportunity. Now, I like this. Why? Because of the liquidity that has been built. So I would not mind. Market, come down lower. Come down. Come down. Come to me. Give me trade 7 so we can continue to send that market up. Right? Now look, just because I like that zone doesn't mean that's my only zone. I have a breakage structure here. My starting point is right here on the 4-hour. Now I ain't gonna lie, this isn't my most favorite starting point. Why? Because of the liquidity. The market can easily manipulate and then head out. Right? So with that being said, with setups like these, I like to either test trade, which is a heavily under leveraged lot, which meaning I'm not risking 1% per trade. I'm probably risking a fifth of a percent. My test trades are very small, right? Let me just break that down too. Why not? So I usually, when the markets are in my lower zones, right? The lower zones, the zones that I really want, I will risk 1%. But on something like this, something a little bit more shady, right? It doesn't have the higher quality potentials that I see, right? I like to under leverage. So usually I do risk 1% per trade. But on something a little shady, I like to break up my percentage. So I like to go ahead and break it up with, let's go. I pretty much take a fifth. So let's go ahead and see 25%, 25%, 25%, or 0.25, sorry, 0.25%. right? So I'm breaking up 1% into quarters, 0.25, 0.25, 0.25, 0.25. Let me just put a point because I know some of y'all be like, yo, this guy's crazy. Now, what I like to do is I'm going to go ahead and just take 1.25% and I'm going to leave 0.75%. Give me an 8 if you guys are with me so far. This is how I test trade. I'm breaking this down to you. I told you guys I was going to give you guys all the sauce today. I told y'all to get all your uncles and aunties and your theos and theas and your cousins from next door on this call today. Right? I'm going to take 0.25, leave 0.75, and I'm going to break this up even more. Right? I'm going to break this up even more into fives now, into fifths. 0.05%, 0.05%, 0.05%, 0.05%. I need one more. 0.05. Oh my goodness. Percent. Right? 1, 2, 3, 4, 5. I like to take a fifth. I'm gonna break it down. Guys, I'm up 6%. I should already be conservative. The moment you keep trading and you be reckless with your capital, you might as well give all that shit back. You might as well just give it all back. So with something that reckless, I'm going to take 0.75, break it up into more, break it down even more, and I'm just going to take a fifth. That's what I like to do. Y'all can break it down however you want, right? But that gives me 1, 2, 3, 4, 5, gives me 5 chances to catch a shady setup if I even want to be that aggressive. And at the end of the day, I will only lose 0.25%. Give me a 1 if that makes sense, guys. I know I started drawing numbers and some of y'all was like spacing out. I get it. Watch the recording, please. This is important stuff. Now again, y'all don't have to break it down this slow, right? Y'all can just use 0.25. But for me, if I'm up, I'm not gonna give money back. Like I don't care. I'm not gonna give money back, especially for something that's that shady, right? But again, this would be trade 7, stop loss at the low, at the most dominant low, or the low that is most visible to you. I don't like this because this looks like an equal low in itself, right? But I'm going to use this as my 10 or in my 10 trade cycle for examples. Trade 7 and then trade 8. Right? Because again, just because I see liquidity does not mean it can't give me a partial point or a break-even point before coming back down here. Right? So having good money management and following your rules, guys, very, 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 very important. Very important. Okay. So that's what is I guess I'm looking at for a CAD CHF. I don't really trade it, so I'm not going to trade this, but we'll leave it here and see. We'll see what it looks like in the next week or two. Let's see what we got. I'm just looking around trying to find examples for you guys. Oh, let's use this. This is a great example. Let's see if any of these look any different. Something, oh man, this is such a great example. All right, let's go to ADJPY. And again, I'm only focusing on this structure here, okay? Only focusing on the structure here just for the example's purpose, right? Just for the risk rewards purpose, okay? I can see we have a breakage structure to the downside. And I can see we have the change of direction to the upside. So guys, once I see my change of direction, what should I be looking for? What is my bias? Am I looking for buys or sells? Let's go. Let's go. I'm looking for buys. Okay. So as of right now, this is my starting point, and this is my left shoulder. My starting point is my first opportunity, and my shoulder is my second opportunity. So again, opportunity number one, that's the ugliest one I've ever seen. Opportunity one, opportunity two, right? So I got to take these in order, guys. My first trade is here. The lowest wick would be there in that area. If you want to use that, you can, I guess, but that's pretty defined. 1 to 3, risk to reward. Guys, if I was only going to wait for the lower zone, I would have been left. And I would have missed out on a perfectly good opportunity because I want the market to come lower. Guys, saying I want the market to come lower is pretty much saying you have all control in the market. The market is always going to listen to you, which like makes no sense to me. You know what I'm saying? Like it's like you don't have that much control, guy. Like you don't even have that much capital. Like if you think you like if you have that much say, sell the market to yourself. Like if you're that like if it's big dog shit, like you feel me? But check me out. Break a structure. Very visible. 3 candle breakout rally. My starting point is there. Opportunity one. Guys, hits take profit. We could even use this because those other 2 trades haven't even played out. So I'm up 6%. Plus 6, right? This is trade 7 technically. Trade 7 hit. Gave me 3%. I am now up 9%. Fire. Now, when you focus on one pair, this is what I love. Like when you just mind your business and just continue to mark up structure, guys, would that be considered a break of structure to the upside? Would this be considered a BOS? Yes. This opportunity was taken, not looking to buy off this opportunity anymore. Let's go ahead and adjust to new opportunities. So now this is the closest opportunity. And if the market wants to disrespect, I will be gladly to buy right here, right? This is opportunity number 8. Opportunity number 8 has not hit TP3. What it looks like, it's on its way. So let's just say the market does hit, right? Let's say the market does hit. We're up 9%. This is trade 8 plus 3%. 10, 11, 12. We are up 12%. We are up 12% for the week. And it's only trade 8. Guys, you have to ask yourself, am I good for the week? Remember, my worst case scenario was 8%. You're 2% away from doubling worst case scenario. You have to ask yourself, do I have to continue trading? You don't have to. Totally optional, right? Let the week finish, start fresh. Pay yourself for the weekend, start fresh. But look at what we got here, guys. Sometimes the market's gonna say, bro, you're up 12%, but we just keep printing structure. Break a structure to the upside. Opportunities are just being printed. Opportunities are just being handed to you left and right. When you mind your business, opportunities present themselves left and right. Multiple trades were taken in here. Multiple trades. You could be in that one as well. What's going on here? Break a structure. This can be the next continuation move. Let's see. Let's move this out the way. Can I move this? That would be so dope if I could move this. Let's go. Again, we have a starting point right here to sell the market. It's holding it down as we speak, literally. The market can easily give us a nice rejection and then continue with this bullish bias. We will have to see. We will have to see. And we'll just keep it like this. We'll just keep it like this for now. Guys, give me a 10 if you had some clicking moments today. Let me know, guys, who had some clicking moments today, man? Who feels a lot better? Who feels like the power is literally in their fingertips? As long as you understand structure, you understand your strategy, whether it's smart money or levels, right? Guys, each strategy is going to have similar zones. And I know Valentino, he looks his one of his starting point or one of his entries is a demand zone. It's an order block, which is what for us? It's a starting point. His next entry is mitigation. What's mitigation for us? The right shoulder. So, guys, like I promise you, I'm watching these guys as boot camps so I could break down whether it's boring stuff, tedious stuff, advanced stuff. I'm taking all this information in and trying to break it down and simplifying it for you guys. Because one, I know I needed it at your guys' stage. And two, I wish I had somebody like me in your guys' stage right now. Like, I remember, bro, like, I remember going to Arizona convention and I'm like, bro, like, I'm so close. Like, I'm so close to like going over that hill, but I know something is missing. And for me, that something was more one-on-one mentorship. That was the only thing I could think of. I watched every video Oren had like 5 times, every single one, all 169 videos on his in his boot camp or in his favorite session. I promise you, I watched every video 5 times. I understood damn near everything, but I still understood I needed that in-person guidance. And then during Arizona, I was literally thinking that, like, bro, I was telling my guys, like, bro, I know I'm like right there, bro. I'm right there. And I was like, I was almost done with trading because I was so frustrated that I couldn't get help, right? Mainly because I was the only one trading levels at that level. So, like, nobody around us could help me because I was the highest one around us, right? Like, that's what my frustration was. So I knew I needed somebody who had more experience than me to help guide me. And as soon as I got in touch with Oren, man, everything changed. Everything changed for me. My trading went up, and I mean like that, snap of a finger, overnight. Everything started to click and sink in, and I felt like a freaking robot. So I know if I needed that, I know you guys need that. So, and I love being that person for you guys. So I hope you guys had some clicking moments. Oh man, for sure. I got you. I got you guys. I got you guys. Keep plugging in. Keep taking the notes. I appreciate you guys for hopping on. I hope you guys had some clicking moments. Send in your charts. Have a great trading week, and let's kill it, guys. Trade responsibly. I will see you guys on Friday. Have a great week, guys.